Hey everyone, welcome back to Corporate Decoder. Today, Star Foods Corp just filed their quarterly report, and I am seeing a lot of challenges that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is in a really tough spot with declining revenues and a lot of debt, and they are warning that they might not be able to stay in business. This is the standard quarterly report that public companies have to file with the US Securities and Exchange Commission, or SEC. It gives us a look at how the company is doing financially over the last 3 months. Star Foods Corp is filing this for the period ending the 30th of June 2026. Right off the bat, they are warning everyone that this report talks about the future and things might not turn out as expected. They're saying that many things could go wrong that might make their actual results very different from what they are planning. This is a big signal that things are uncertain. Let's dive into the numbers. Looking at their balance sheet as of the 30th of June 2026, Star Foods Corp has total assets of $1,288,041. That might sound like a lot, but compare that to the 31st of December 2025, when their assets were $1,386,234. So their total assets have actually gone down. Now, let's look at what they owe. Their total liabilities are a whopping $4,261,146 as of the 30th of June 2026. This is a big jump from $3,742,736 at the end of 2025. When liabilities go up while assets go down, that is usually not a good sign. This is where we see a really big problem. Stockholders' equity, which is basically what is left over after you subtract what the company owes from what it owns, is a negative $2,973,105. That means they owe more than they own. And it is even worse than it was at the end of 2025, when it was a negative $2,302. This negative number is often called a deficit, and it means the company is technically bankrupt from a balance sheet perspective. When we look at how they made money, or rather how they lost money, the picture gets even clearer. For the 3 months ending the 30th of June 2026, their revenue was $532,417. That is a big drop from $1,172,340 in the same period last year. Their net loss for this 3-month period was $65,125. While that might seem small compared to the 6-month loss, it is important to remember that revenue is shrinking fast. Looking at the first 6 months of 2026, their revenue was only $782,676. That is a huge decrease of about 63% compared to the first 6 months of 2025, when they brought in over $2.1 million, and their net loss for these 6 months was $800,438. Now, let's talk about cash, which is super important for any business. For the 6 months ending the 30th of June 2026, they used $95,945 in cash from their normal business operations. This means they are spending more cash than they are bringing in just to run the business day to day. This is a significant concern, especially when you look at their total cash on hand. At the end of June 2026, Star Foods Corp had only $11,119 in cash. That is an extremely low amount of cash for any company, let alone one with millions in liabilities and a shrinking revenue stream. This is a major red flag for their ability to keep operating. This is probably the most critical part of the filing. The company itself is raising a big red flag, saying there is substantial doubt as to the company's ability to continue as a going concern. This is a formal warning that they might not be able to survive. They are relying on their ability to increase sales, find new businesses to buy, and most importantly, raise more money to keep the lights on. If they can't do these things, the financial statements themselves say they might not be able to continue. This is similar to what we saw with companies like Bed Bath & Beyond or Rite Aid before they faced severe financial difficulties. Historically, about half of companies that issue this kind of warning in the micro cap space end up delisting or going bankrupt. Looking at their liabilities, accounts payable, which is money owed to suppliers, jumped significantly from $538,635 at the end of 2025 to $771,957 by June 2026. This could mean they are struggling to pay their bills on time. They also have a large amount of convertible notes, currently valued at $1,922,579. These are loans that can be turned into stock, and their value fluctuates. The fact that they have such a large amount of debt that can convert to stock means potential future dilution for existing shareholders, and a significant financial obligation. They have been losing money from their core business operations for a while. For the 3 months ending the 30th of June 2026, their loss from operations was $154,569. For the 6 months, it was $674,662. This shows that their main business is not profitable. This section discusses the company's internal controls, which are basically the rules and systems they have in place to make sure their financial reporting is accurate. They admit to having material weaknesses in these controls. These include not properly tracking inventory in their warehouses, issues with their financial closing and reporting process, and not having enough separation of duties within their accounting department. This suggests a lack of strong financial management and oversight, which can lead to errors and makes investors nervous. There is also a significant legal issue going on in British Columbia where their subsidiary, TOBC, is fighting to keep its lease for an aquaculture facility. The lease was terminated, and they are appealing the court's decision. The outcome is uncertain, and this adds another layer of risk. So, what is my take on all of this? Star Foods Corp is facing serious headwinds. Their revenue is shrinking fast, they have a lot of debt, and they are warning that they might not be able to stay in business. The company has negative stockholders' equity, very little cash, and admitted weaknesses in its financial controls. The company's direction looks very concerning. The biggest risk I'm watching is their ability to secure additional funding. What I am actually looking for is any sign of a turnaround in revenue and a reduction in their debt load, which seems unlikely right now. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.